Hey, good morning, folks. My name's Eric Wilkinson. Welcome to Pro Trader Strategies. This is Spotting the Trade, trying to get you what you need to know before you go. So let's get on with it. We've got some economic data we're going to talk about, then the markets, wrap it up with some opportunities that we can find in the markets. All right, so let's get on with it. Let's talk a little bit about everything that's going on that we've had this week. A lot of economic data, most of it pretty good. Employment numbers better than expected. Remember earlier on this week, we also got some data in the form of retail sales, better than expected there. Capacity utilization, meaning the manufacturers are driving as well. We did see hotter than expected inflation, but we're also seeing now this retail sales. So the higher inflation doesn't seem to be slowing down folks from buying for the most part. We've seen core retail sales go higher. Remember, that's going to strip out some of the more volatile aspects like automobiles, transportation, that folks are obviously finding cars to buy despite the fact that there's not a whole lot of inventory out there. So not really slowing down on that front. Then we saw the PPI number start to ratchet up a little bit here. That's going to be offset to the consumer in some way, shape, or form. And now we're heading into the end of the week here, and we've got all the Fed governors talking. They've digested all this information as well. They get some data points that we don't necessarily get to get our eyes on, and we're going to be able to try and digest what their focus is going forward this summer on interest rates. Some folks are saying that we're going to be upwards of 2% in 30-day Fed funds by the end of next year. I don't necessarily think that that's going to be the case. I think that we are seeing some of these inflationary pressures not ebb and not be transitory, but on the flip side of that, I think that we're going to see a lot of product come into the United States, and that's going to send prices down because of that supply. Remember, we've talked about that supply that got backed up during Christmas. Well, that's starting to get offloaded, but there's no real incentive to buy right now because there's no holiday. There's nothing really major coming up. We got the summer, but that's usually kind of a lull for it. Maybe some clothing and stuff, but for the most part, we'll probably see some pressure here on pricing for retail goods, I think, as we start seeing the supply start to come back into the markets. Now let's move over to, there we go. I got to get my screen up. Let's get over to the markets here. We've got crude oil selling off. Now, yesterday it did look like we were starting to find some bottoms here. We're seeing some tension start to build up on the Ukraine-Russian border. Now, that's been driving some prices as well. Now, today, seeing a little bit of a sell-off. Yesterday's candle was making it look like we were trying to find a bottom after breaking out of this steep trend channel here. So rolling back over, looks like we should at least test, trying to get my line up here, at around $85 here in crude oil for support. And hopefully that starts to happen coming into the summer, because I think we want to see folks getting out there and spending money. And usually when we see those higher prices in gas, it's going to slow down some spending in other ancillary places. You think about a tax on individuals. Well, this inflationary tax or crude oil is a major tax on the middle class because they have to spend money to get themselves to work. So that will drive inflation, because if I can't spend $5 somewhere else because I have to put it into my gas tank due to the 50-cent increase, well, that money's not being spent elsewhere in the economy, and that will cause some pain on the local businesses. All right, gold futures making a blast off to the top, really a flight to safety here as folks are pulling out of some of the high flyers. We've got the tension going on in the Ukraine. So folks have got to put their money to work somewhere, and that is usually where we start to see them going to gold. Now, yesterday we were in the 1900 handle. Haven't seen that in quite some time, but on top of this trend channel here, making a bit of a top. I don't know how strong this trend channel is, so I would not hold a whole lot of credence to it at this point. We have bounced up on it several times, but we're going to have to see if it really acts as a support and resistance going forward in gold there. But I don't really see the strength in gold slowing down too much too soon because of the volatility we're seeing across the board here. I am a little surprised that we're not seeing Bitcoin make that move to the upside, though. VIX starting to spike there. Well, that's because we've had sell-offs the last couple of days, but we haven't really gone anywhere. And I've talked about this time and time again for the last couple of weeks. Now that we've kind of pulled back to this point of control, we could easily see ourselves consolidate in and around this area for at least a week or two. So I would not be surprised to see some more volatility around this area, but just really when we kind of look back at it, hey, we're still right there at around 15,000 in NASDAQ. Yeah, 800 points away, but listen, we've seen the NASDAQ move 200 point increments, so it's not really too far away. Now we're looking at the Dow Jones Industrial Average, right back to the point of control. Well, that's where time and volume is. And when we transact it at the same price all the time, there is no angst. When you've seen that price in your head reoccur over and over again, a lot of times it will settle down because we've seen that price. We don't have to worry about ever trying to get that price. It's not too hard to achieve because that's where it has a tendency to spend time or transact. Okay, so that usually has a tendency to calm the markets a little bit. E-mini S&Ps, what? Right at the point of control. We talked about this. Those markets have pulled back and found their value, if you will, not overextended to any direction or the other. That will be a calming aspect to the markets. I talked about that this week. Not enough economic data to really make the markets move. We're really looking for these talking heads in the Fed to give us some guidance as to what their plans are going forward. And that's why we're with that out there, I guess, if you will, that out there and the point of control with the time sequence trading, it's really just tough to break out of. We need something really, a kick in the pants to get this markets moving. And as we can see here, E-mini S&Ps overnight, yeah, we did get a little bit of a bounce, but I think that was more of a dead cat bounce, which is just some early weak hands covering those positions, and we get a little bit of a bounce before we start seeing that reoccur. So at the end of the day, equities pretty much sideways. You're going to see a lot of volatility within different names, I think, as we start seeing some of these sector rotations happening and a little bit of consolidation while people are selling out of some of their big positions, most likely tech, and rolling it into some blue chips going forward here this year. All right, that's all I got for you. I hope you guys have a great weekend. And if you can't take that, take it easy.